You see this? This was me. I just ran the numbers on a simple $62,000 investment gain. I calculated the 20% capital gains tax, and the bill was $12,400.
$12,400. Completely wasted. Handed over to the government.
Why?
Because I made the single biggest Roth mistake you can make. It's the inefficiency that 99% of people accept as normal.
They don't know the hack.
This video is my personal plan to fix it. I will show you how to build a compounding engine that legally pays 0% tax.
And if you think you make too much money for a Roth IRA, you're wrong. Stay until the end. The final hack I'll show you is the backdoor method, the exact strategy the 1% uses to bypass the system. This isn't retirement planning. This is a wealth hack.
Before you can build the engine, you must see the traps. The Roth mistake isn't just one error. It's a system of inefficiencies designed to stop you. The PSY-OP number 1, the "it's for later" lie.
The system is designed to exploit your impatience. The 99% hear the word retirement, a word associated with being 65, and their brains shut off. I'll deal with that later. They are trapped in the present.
They don't see the math. We only see the math. That $12,400 tax bill? That was the cost of choosing the wrong account. That's a 100% inefficiency. You were leaking money. The PSY-OP number 2, the managed fee trap. But the other mistake is just as bad. You decide to start. You walk into a big bank.
An advisor puts you in their aggressive growth fund. You look at the fine print, a 1.2% advisory fee and a 0.9% expense ratio.
You are being robbed. You are paying a guaranteed penalty for the privilege of someone else gambling with your money.
In our last videos, we discussed counterparty risk, the risk that an exchange holding your crypto, like Kraken, could freeze your account.
This is performance risk. It is the definition of an inefficient system. This brings me to my question for you. I want you to pause this video, open your investment account, and find the expense ratio of your funds. Let me know in the comments, what is the highest expense ratio you found? If it's over 0.1%, you're in the trap. I'll read every response. So we've identified the 2 leaks, taxes and fees, the $12,400 mistake. How do we plug these leaks? Permanently.
It starts with my personal discipline rules, which lead directly to the technical hack.
This is my blueprint for the tax-free engine. It is not complex. It is focused. Discipline rule number 1. Max out your shield first. This is the psychology. Before I buy a single individual stock, before I speculate on a new altcoin, I max out my Roth IRA shield. The 2025 limit is $7,000. I treat this as my most important bill. Why? Scarcity. You cannot get back the contribution room you missed last year. It is gone forever. Every year you fail to max it out is a permanent loss of future tax-free space. I pay myself first by funding this shield first. Discipline rule number 2. Don't gamble in your engine. This is critical. A Roth IRA is not for meme stocks. Why? Because you cannot write off the losses against your income.
If you put your $7,000 in and it goes to zero, that $7,000 of precious tax-free space is gone forever. You've destroyed it.
The hack isn't to get lucky. The hack is to let compounding do the work, tax-free, for 30 years. My rule is simple. I only buy broad, low-cost index funds. I am building a base.
This leads to the technical hack, my 3-step system for an automated tax-free engine.
This is what I actually do. Technical step 1. Choose the right interface, the brokerage. You must avoid the high-fee traps. I don't use a robo-advisor, and I never use a big bank.
I use a low-cost brokerage. I personally use Vanguard for my Roth IRA. Why? Their incentives are aligned with mine to lower fees. But Fidelity or Charles Schwab are also excellent. They offer zero-fee index funds. The brand doesn't matter as much as the fees. The fee must be near zero. We are hunting for expense ratios of 0.03% or less.
Technical step 2. The one-fund hack, automation.
I am an optimizer. I do not want to manage this. I want to set the parameters and let the system run. I don't buy 20 different funds. I buy one. My personal choice? A total U.S. stock market ETF. The ticker is VTI. It holds over 3,000 stocks. I am buying the entire U.S. economy for an expense ratio of 0.03%. If you want global, you add VXUS, Total International. That's it. I set up automatic investments for my bank account. The entire system is automated. I am guaranteed to capture all the growth, and I pay almost nothing in fees. Now, this is the system.
But, you say, I make too much money. The government blocks me.
This is the mistake from the title, thinking you are disqualified. What I am about to show you is the most important hack in this video. This is the 1% backdoor hack. Technical step 3, the backdoor hack for high earners. Pay attention. This is an accounting trick. It's 100% legal.
You open a traditional IRA at your brokerage. Anyone can do this, regardless of income.
You deposit your $7,000 into this traditional IRA. You do not take a tax deduction on it.
You wait 1 day for the cash to settle. Then you click the Convert to Roth IRA button.
Boom! Because you never took a deduction, the conversion is a non-taxable event. You have just legally bypassed the income limits and funded your tax-free engine. It's a few extra clicks. It is the definition of hacking the system. This system is powerful. It is automated. It avoids the $12,400 tax mistake. But you can set all this up and still see your account go to zero if you make one of these 3 fatal errors.
You must avoid these. Fatal error number 1, treating it like a savings account.
This is the worst mistake. You put money in, and then you pull it out 5 years later.
But it's my money!
Yes! And you can withdraw your contributions, not the gains, tax-free and penalty-free. But you never get that $7,000 of contribution space back.
You have permanently shrunk your tax-free engine. You broke the seal. This money is not your emergency fund. Do not touch it.
Fatal error number 2, the analysis paralysis mistake. This is the optimizer's greatest weakness. You spent 6 months deciding between VTI and VOO, between Fidelity and Vanguard. You are trying to optimize 0.01%. During that 6 months, the market went up 8%, and you missed it. The act of starting is infinitely more important than the perfection of the start. Pick one, Vanguard. Pick one low-cost fund, VTI. Start today. Done is better than perfect. Fatal error number 3, the cash drag inefficiency. This is the silent killer. You fund your account, you even do the back door, and then you forget to invest the cash. It just sits there. Or you get scared of the market, so you wait for a dip. That cash is being eaten by inflation.
It is not working. It is a wasted, inefficient asset. The rule is, money that enters the Roth IRA is invested immediately. We automate this. We are not market timers. We are system builders.
So, let's summarize the hack.
We stop making the Roth mistake. We stop seeing it as a retirement account and see it as a tax-free engine to avoid that $12,400 tax bill.
We ignore high-fee advisors and use a low-cost brokerage like Vanguard to control our assets and eliminate fees.
3. We execute the technical plan. We buy low-cost, broad-market ETFs like VTI. And we use the backdoor hack if our income is too high. This is how we optimize the existing system to our absolute advantage. If you are committed to winning the financial game and finding every inefficiency, then your next logical step is to subscribe to Digital Dollar Wallet.
Don't just watch these hacks. Commit to building your own system. We have now optimized our offense inside the traditional system.
But what about defense in the new system?
In our previous videos, we talked about securing our digital defense, our crypto, with hardware wallets like Trezor. We've talked about the risks of exchanges like Kraken.
But how do you use that crypto? How do you spend it or take profits without triggering another $12,400 tax nightmare for every single transaction?
How do you create defensive liquidity? That is the subject of our next analysis, the stablecoin layer hack.